Hey, this is Justin with DayTradeTheMarkets.com, and believe it or not, it's December already. It's December 2. I hope everyone had a nice holiday break from the markets. And in today's video, I wanted to look at the gold market, which had a pretty nice sell-off today, and talk about two main issues. One, a strategy or a methodology that you can use for trading big gap openings, and then two, when you do have a trend day like we had today, talk about 4 different ways you can get on board those types of days. And so the first thing I'll talk about is the gap openings. And so you can see that today we had a pretty strong, pretty big gap opening down from the low on Friday to today's open. And so the simple strategy, a lot of times gaps will fill, but rather than just blindly assuming a gap is going to fill, we think it makes sense to wait for a strong piece of evidence to see if this thing's likely to fill or if it's more of a go-with situation. In this case, the first hour or so of the regular trading hours, we didn't have any strong evidence. The first piece of strong evidence we had was this level 3 or extreme selling aggression bar that came in about 50 minutes into the trading or about an hour into the trading session here in gold. So that is telling us this is very much likely to be a continuation or a runaway type of a gap, and that you're looking to get on board. So again, had this had a level 2, a strong buying aggression, or a level 3 extreme buying aggression that would have come in as the market was moving higher, that's good evidence that this gap is likely to fill, or at least maybe fill to halfway. That was not the case, so rather than getting trapped, this is a good indication that you just want to go with this gap opening. And that was especially, confirmed because this line here that I've drawn in was the close of actually Thursday's low, I should say. So that was a pretty good reference area to look forward to. If we look here at a daily chart, just for an example, here was Thursday, and then Friday we had a bit of an up day into the gap from last week, and then today we opened right about at the low of Thursday's, right around Thursday's low. So again, if we look at this, which is this line right now, that's a pretty good indication that we had a little bit of support there early on, but we didn't have any strong buying that came in, and then the fact that we got some extreme selling that came in below Thursday's low is just again confirming from a little bit bigger picture perspective that this is more likely than not, nothing's a guarantee, but more likely than not to be a runaway gap. So we've got a big gap opening that's having some follow through with potential setup for a nice trend day. So let's talk about a few ways that you can get on board a trend day. I'll just kind of go from the reverse here. One is with what we call a Confluence Trade, and just to give you a little bit of a background on that, the idea of Confluence is that our software is giving you a lot of different pieces of evidence, the main one being these relative aggression bars. That's the most proprietary thing there, as well as these high velocity moves. We also have real-time support resistance zones, real-time deceleration and divergence bars, a real-time path of least resistance filter, and then we also look at the bigger picture and bigger picture biasing, bigger picture key levels. So the idea of Confluence is that when you have 1 or 2 or 3 or 4 or 5 of these pieces that come together, or 6 or even 7, it doesn't mean it's 100% slam dunk, but it's telling you the odds are very much more in your favor, as opposed to if you just have one of these factors in your favor. It's like evidence or pieces of a puzzle, and the more pieces of a puzzle, so to speak, that come together, the clearer your image of what's going on in the market should be. Just like if you were doing a puzzle on your table, the more pieces that you put together, the clearer that picture is going to be. So again, you're increasing your edge every time another one of these pieces lines up. So in this case, just looking at the idea of Confluence, heading into the day, if you just look at our bigger, the daily chart, it's pretty simple to see that we have a bigger picture down bias. Here's a pretty key level that we were talking about, which was Thursday's low. So those are 2 bigger picture indications that we'd, all things equal, rather be on the short side. Our filter is strongly bearish. There's a third. The first big piece of evidence is this level 3 or extreme selling aggression bar. So you've got a lot of factors coming together. Here's another piece of evidence that comes together right here, which is this red resistance zone that drew in real time. So again, if you just look at what we have going on right here as part of a Confluence idea, you would be selling at a resistance zone, at a bigger picture level of resistance, in a bigger picture down auction with a dark red or extremely bearish filter. You've got a lot of pieces of evidence coming together right in there. Same thing right in here. Okay, it's giving you a lot of pieces of evidence that are coming together, so you have a very high edge trade. Does that mean it's going to work 100% of the time? No, of course not. But nothing, nothing is a guarantee. But you've got a very strong edge. If you have the patience and the discipline to wait for those types of setups, you know that you are going to have a very high chance of success. So that's the idea of a confluence trade. Idea of a continuation trade is that if we have, for example, in this case, a high velocity move, which is showing us that strong selling has come in, or in this case also a level 3 selling aggression bar, and our first expectation when one of those happens is that the market's going to test up to the high, what we call the retracement trade. So just like we had here where this level 3 bar came in, and we would expect the market to test up to the high and find some resistance. That's exactly what happened basically to the tick. So you could have gotten in right there, you could have also gotten in a little bit later, but that's the idea of this retracement trade. The continuation trade is when one of these bars comes in, these extreme bars comes in, but instead of having a pullback to the high, it just continues on right away. So in this case we have a high velocity move and a level 3 bar that happen to overlap with continuation right away. So instead of waiting for the pullback toward the high of this, you can simply wait for the pullback toward the high right there. So again, it's the continuation trade idea. That's another way to get on board. Okay, so far we talked about the confluence ideas where a lot of pieces of evidence come together. Here's a continuation trade idea that we were talking about right in here. Okay, again with the idea that you're making a pretty clear assessment that bears are in control. This is a trend type of a day based on the stuff that we talk about all the time. So how do you get on board? There's two different ways. I touched on this a bit earlier, but the level 3 retracement trade, this is kind of the most basic trade that we talk about. But again, do you want to be on the short side? In this case, clearly you do. So here's a level 3 bar. Wait for the retracement. Okay, wait for the market to test to the high of that bar. The next one comes in, wait for it to test to the high of that bar. The next one comes in, wait for it to test to the high of that bar. Now this also happened to overlap with a continuation trade right in here again, but same idea. Next one comes in, wait for the retracement to the high of that bar. Okay, it wasn't until the very end of the day where this one didn't actually work. So you had 4 that worked, 5 that didn't, or 1 that didn't. 4 out of 5. Just on, again, the idea of retracement type of a trade. And the simplest way to go would be with the breakout trade. You take on a little more dollar risk, but in this case you have the new low of the day, especially if the market's in a bigger picture down market. New low of the day made on a level 3 bar, just get on board. Now again, you have a little bit more risk because you'd want your stop to be above the high of that bar, so you're hoping that the market just takes off without you, but the trade-off is if you wait for the retracement and it doesn't happen, you miss out. So if you're very bearish in this case, the breakout trade is certainly an aggressive trade, but it makes sense. Here's another new low of the day on a level 3 bar. This one didn't pull back, so breakout trade certainly would have made a little bit more sense there, or I shouldn't say would have made more sense, but it worked out better in that case. So there's just a lot of different ways to do it, but the key is you're trying to make sense of the context of the market first. Which side do I want to be on? Which side do I not want to be on? And from there you have a lot of different ways that you can get on board, but you're using the evidence to put the odds more in your favor. So again, we tend to tell people to start with the idea of make sense of the direction, and we talk about this both from a bigger picture perspective and also what the structure's telling us, what the filter's telling us, that sort of thing. Once you have that, we like the idea of the confluence trade and the continuation trade, the confluence trade and the retracement trade is kind of the first building blocks. Then you add the continuation trade, add the breakout type trade. And these are all really good trades to get on board when the market's pretty clearly moving in one direction. Put the odds more in your favor. So hopefully that makes sense. And if you have any questions about that, let us know. Otherwise, have a great evening, and we'll talk to you soon.